Wall Street concluded another record-setting week, with the S&P 500 climbing 0.5%, the Dow Jones Industrial Average rising 0.4%, and the Nasdaq Composite increasing by 0.7%. This marks the second consecutive day all three indexes have reached all-time highs. The gains were bolstered by FedEx, whose shares surged following a stronger-than-expected quarterly profit report, highlighting robust operational performance and efficient cost management. In commodities, gold prices continued their upward trajectory, driven by expectations of lower interest rates and increasing concerns about inflation. This trend underscores the market's anticipation of a more accommodative monetary policy environment, which typically benefits non-yielding assets like gold. Conversely, Japanese equities faced pressure after the Bank of Japan announced plans to reduce its holdings in stock funds, signaling a shift in its asset purchase strategy. This move could have implications for market liquidity and investor sentiment in the region. Overall, the week's developments highlight a complex interplay between corporate earnings, monetary policy expectations, and global market dynamics.
Core financial event. McDonald's is encountering significant public opposition in its efforts to expand its presence in the UK, particularly in residential areas, which has led to multiple planning application refusals and withdrawals. Key entities: McDonald's Corporation, UK local planning authorities, the iPaper, British Medical Journal, and rival food chains such as Greggs and Wingstop. Context and impact. McDonald's, a staple in the UK's fast food landscape since 1974, is facing resistance as it plans to open 200 new franchises to mark its 50th anniversary in the country. Despite its robust global profitability, the chain experienced a £14 million turnover decline last year, with competitors like Greggs surpassing it in popularity for breakfast offerings. This backlash is partly attributed to growing concerns over public health, environmental impact, and the saturation of fast food outlets in certain areas. The resistance from local communities and planning authorities could slow McDonald's UK expansion strategy and reflects a broader shift in consumer preferences towards healthier and more premium dining options. This trend could influence the company's market positioning and necessitate strategic adjustments to align with evolving consumer expectations and regulatory environments.
Domino's Pizza Group, the UK arm of the global Domino's brand, is facing significant challenges. With its stock hitting a 10-year low, the company's troubles appear to be cyclical rather than structural, as it continues to generate strong cash flow. However, a profit warning issued earlier this year, citing a tougher operating environment and a 12% cut in profit forecasts for 2025, has raised concerns. The UK division's recent strategy under CEO Andrew Rennie, which included plans to acquire a second fast food brand, has been criticized for diverting focus from core operations. This has led to a 50% decline in stock value since its peak in December 2021. Activist investor Browning West, holding a 5% stake in Domino's, is urging the company to halt acquisition plans and instead initiate a significant share buyback program. The investor argues that this approach would better utilize the company's resources, given the current market conditions. The recently announced £20 million buyback is seen as a positive step, potentially yielding a 12.6% return. Panmure Liberum suggests that further buybacks, funded by debt and free cash flow, could significantly enhance shareholder value. Despite recent setbacks, Domino's Pizza Group's strong brand and cash-generative business model, combined with its low valuation compared to international peers, present an attractive opportunity for investors looking for value in the market.
The cryptocurrency market is abuzz with speculation surrounding the potential approval of an XRP exchange-traded fund, ETF, which could significantly impact Ripple's price, currently aiming to break the $4.50 mark. The Rex Osprey XRP ETF, initially slated for launch earlier this month, faces delays, highlighting the complexities of the ETF approval process under the Investment Act of 1940. This act governs mutual funds and ETFs, requiring a more rigorous regulatory framework than spot ETFs, which are directly backed by the underlying asset. Despite these hurdles, the market remains optimistic, with the Depository Trust and Clearing Corporation, DTCC, listing the Canary XRP ETF, signaling back-end readiness but not yet SEC approval. Institutional interest in XRP is robust, evidenced by the Chicago Mercantile Exchange, CME, reporting $1 billion in XRP futures open interest over 3 months. This indicates strong demand for XRP exposure among institutional investors, and a successful ETF approval could amplify this interest, potentially driving Ripple's price beyond $4.50. Meanwhile, MagaCoin Finance is gaining traction as a promising altcoin, with analysts suggesting it could experience substantial growth, positioning it as a viable alternative for investors seeking high returns amid the XRP ETF speculation. As the market anticipates further regulatory developments, investors are advised to stay informed and consider emerging altcoins like MAGACOIN for diversified exposure.
ImmuPharma plc, LON IMM, a specialty biopharmaceutical firm, experienced a significant 21.1% drop in share price during midday trading on Thursday, with shares plummeting to as low as GBX 10.80 before stabilizing at GBX 11.76. This decline occurred amidst an unusually high trading volume of 45.9 million shares, a stark increase from the average of 8.5 million. The company, which focuses on peptide-based therapeutics for autoimmune diseases, reported disappointing quarterly earnings on August 6, with a negative earnings per share (EPS) of GBX 0.38 and a strikingly negative return on equity of 131.41%. Analysts predict further negative performance, forecasting an EPS of -339.00000022 for the current fiscal year. ImmuPharma's market capitalization now stands at £62.47 million, and its stock exhibits high volatility with a beta of 1.53. The company's lead program, P140 Lupuzor, targets lupus and potentially other autoimmune diseases, though the market response to its recent performance has been unfavorable. The drastic drop in share price reflects investor concerns over the company's financial health and future prospects, especially given its current price-to-earnings ratio of -1,404.49, indicating significant financial distress. This event underscores the challenges faced by biotech firms in achieving market confidence, particularly when earnings and strategic developments do not meet investor expectations.
Standard Chartered plc, OTCMKTS SCBFF, has experienced a notable increase in short interest, with the number of shares sold short rising by 24% from mid-August to the end of the month, reaching a total of 214,600 shares. This increase in short interest indicates a growing bearish sentiment among investors who are betting on the stock's decline. Despite this, Standard Chartered stock has shown resilience, trading up by 0.5% and opening at $19.52, close to its one-year high of $20.01. The company's recent quarterly earnings report also exceeded expectations, with earnings per share (EPS) of 74 cents surpassing the consensus estimate of 60 cents, and revenue of $5.51 billion, beating analyst predictions. Standard Chartered operates globally, providing banking services across Asia, Africa, the Middle East, Europe, and the Americas. The company's robust performance, reflected in a net margin of 12.27% and a return on equity of 10.73%, underscores its operational strength despite the increase in short interest. The market capitalization stands at $45.54 billion, with a price-to-earnings (PE) ratio of 10.78, suggesting that the stock is reasonably valued relative to its earnings. As equities analysts project an EPS of 1.66 for the current year, the bank's strategic focus on its core segments could continue to drive growth, potentially offsetting the negative sentiment indicated by the rise in short interest.
Ohio's Southeast Economic Development, Ohio SE, recently hosted its inaugural Fall Prosperity Forum at Zane State College, highlighting significant economic achievements in Southeast Ohio over the past 5 years. The event, attended by 140 guests, featured speeches from J.P. Nausif, President and CEO of Jobs Ohio, and Matt Abbott, President and CEO of Ohio SE. Nausif emphasized the region's growing appeal to enterprises due to its ready sites, reliable utilities, and low business costs, resulting in a doubling of projects since 2019. Abbott highlighted Ohio's accomplishments, including nearly $4 billion in new investments, far exceeding their initial targets. The organization has supported 244 projects, creating 5,715 new jobs and retaining 31,030 jobs, demonstrating a robust regional economic momentum. Looking forward, Ohio SE is partnering with the New Growth Group to update its strategic plan, aiming to further enhance the region's growth over the next 5 years. Attendees participated in a survey to provide input on future regional development priorities. The forum underscored a commitment to collaborative efforts, with a focus on real projects and tangible economic returns. Jobs Ohio's new 5-year plan, Jobs Ohio 2030, Let's Grow Together, was also introduced, signaling continued statewide transformation and growth. The event served not only as a celebration of past achievements, but also as a strategic call to action, positioning Southeast Ohio as a burgeoning hub for business growth and community prosperity.
Minova Corp., CVE MCI, experienced a notable 46.7% increase in its stock price during Thursday's trading session, reaching a high of $0.23 before closing at $0.22, up from its previous close of $0.15. This surge was accompanied by a substantial rise in trading volume to 511,325 shares, significantly above the average of 163,055 shares, indicating heightened investor interest. The company, which operates primarily in the mineral exploration sector with a focus on gold through its PL Gold Mine and Nokomis property in Manitoba, is also developing biomass gasification technologies for renewable energy production. Despite the positive market reaction, Minova faces financial challenges, including a negative debt-to-equity ratio of -3.33, a quick ratio of 0.12, and a current ratio of 0.02, suggesting potential liquidity issues. The company's market capitalization stands at $20.57 million, and it has a negative price-to-earnings ratio of -11.06. The high beta of 2.40 indicates significant volatility, implying potential risks for investors. The recent stock movement may reflect investor optimism about Minova's exploration prospects or advancements in renewable energy initiatives, but the company's weak financial metrics caution against potential financial instability. This development has attracted speculative interest while highlighting the need for careful monitoring of Minova's financial health and strategic progress.
Recyclico Battery Materials, Inc., CVE AMI, experienced a significant surge in its stock price, climbing 33.3% during midday trading on Thursday, with the stock reaching a high of $0.17 before settling at $0.16. This substantial increase in share price was accompanied by a trading volume of 1,121,698 shares, marking a 306% rise compared to the average daily volume of 276,309 shares. The company, which specializes in recycling battery cathode waste from lithium-ion batteries, has seen its stock price outperform its 50-day and 200-day moving averages, indicating strong upward momentum. The sharp rise in Recyclico's stock could be attributed to growing investor interest in sustainable energy solutions and the recycling of battery materials, which are crucial for the electric vehicle and renewable energy sectors. With a market capitalization of $36.82 million and a high beta of 5.10, the stock is notably volatile, reflecting the potential for both significant gains and risks. This trend highlights the increasing focus on companies involved in the circular economy and the potential long-term benefits of investing in technologies that support environmental sustainability. Investors may view Recyclico's innovative recycling process as a strategic advantage in the evolving battery materials market.
Kongsberg Group and ASA, trading under the symbol NSKFF on OTC markets, experienced a significant 21.1% increase in short interest as of the end of August. The total short interest rose to 409,200 shares from 337,800 on August 15th, with an average daily trading volume of 1,500 shares. The days to cover ratio, which indicates how many days it would take for short sellers to cover their positions, has spiked to 272.8 days. This metric suggests a potential squeeze if trading volume remains low and demand for covering increases. Despite the increase in short interest, Wall Street analysts analysts have mixed views on the stock. Morgan Stanley recently began coverage with a mixed rating, while Pareto Securities downgraded the stock to a sell. The consensus rating, according to MarketBeat, remains a sell. Currently, SCBFF is trading at $32.30, with a 52-week range between $19.30 and $50. The stock's performance is closely monitored due to its involvement in the maritime and defense sectors through its three main segments: Kongsberg Maritime, Kongsberg Defense and Aerospace, and other. This increase in short interest may reflect market skepticism regarding the company's future prospects or broader industry challenges.